Trevor Raymond, Director of Research at the World Platinum Investment Council, is here today to talk about platinum, his outlook, and the factors behind the price this year. Trevor, welcome to the show.
David, thank you. It's a pleasure to be on your show.
Yeah, it's a pleasure to have you back. Now, let's give an overview for our audience of the platinum market this year. You had written in your latest Platinum Quarterly that the market was in a deficit and you're projecting more of a deficit going into Q4. Can you explain why?
Certainly, David. What we published in November was that the deficit in the platinum market would be just over 1.2 million ounces, and that's nearly 4 times bigger than we forecast just 2 months ago. And certainly what we've seen is that during the third quarter, mining production came back fairly strongly. However, supply was down by 1.3 million ounces and demand by just under 1 million ounces. So that certainly has boosted the deficit that we're seeing in the market this year.
Okay, let's talk about supply first then. What were the major causes of supply crunch?
Okay, so in the, platinum's an 8 million ounce market. About 6 million ounces comes from primary platinum mining, and then 2 million ounces comes from recycling, mainly from auto catalysts as vehicles reach the end of their lives. So COVID logistics initially stopped, catalysts from being collected and processed, and also people sort of hung on to their vehicles a lot longer through the pandemic, and there was fewer vehicles being scrapped. On the mining side, there were shutdowns in South African mining associated with trying to prevent the disease from spreading, and that reduced supply by about 400,000 ounces. Completely unrelated to COVID, in South Africa, we had a platinum processing outage failure. There's a converter plant that takes material from 4 smelters, and that was out completely in April and May. And unfortunately, that same smelter, same converter at least, had problems, and that's out now for November and December. So the result of that is removing about 900,000 ounces of refined platinum supply this year. So supply in 2020 was down heavily, down by about 18%.
Yeah, so if the market has been in a deficit for a large part of the year, why hasn't the price moved up significantly? If you look at the year-to-date price change compared to the beginning of the year, the current price is not much higher. Compared to palladium, for example, palladium has moved much, much higher from its January price levels. Why do you think there's this disconnect between the deficit and the platinum price?
Thanks, David. So there's probably, I suppose, 3 main aspects to that. So what we saw when the pandemic occurred is that most people realized that the pandemic would reduce vehicle sales. So auto sales were down, therefore platinum demand would be down. The price was certainly weak. Supply became understood. What we then saw was a significant demand for precious metals, demand for gold and silver, and certainly for platinum. So what we had in the first quarter was 300,000 ounces of borrow and coin demand, and a lot of that out of US markets. So people were taking a risk view and certainly owning precious metals. So the platinum price didn't respond. As you've mentioned, it is down on the year. But interestingly, David, if you look at the price between the lows on I think it was the 19th of March, platinum is actually up 61% and gold is only up about 23%. Now, this isn't unusual, and it kind of talks to the nature of platinum. It's both a precious metal and an industrial metal. And interestingly, after the global crisis in 2008, between 2008 and 2010, we saw the weekly returns of platinum outperform the weekly returns of gold by between 30 and 60%. And what we've seen recently is also, with the optimism of a vaccine reducing risk, you've had the gold price weaken and the platinum price strengthen. And that kind of makes sense. As things get better, platinum's industrial performance will increase. And then palladium has another specific issue related to its use in auto catalysts.
Yeah, all right. So that leads me to my next question, which is about the uses or the usages of platinum. Walk us through that, Trevor.
Sure. So, I mean, the demand growth potential is, I think, what a lot of long-standing platinum investors acted on in 2019. We saw over 1 million ounces go into platinum ETFs last year. This year, we saw a little bit of sell-off in March and April. And if you look at the demand side of this platinum market, you've got four main demand segments: automotive, mainly auto catalysts. You've got jewelry, lots and lots of industrial uses, and investment demand. And this year, we've seen the industrial, jewelry, and automotive down on reduced activity and vehicle sales. But on the other side, we've certainly seen the demand growth potential, and that is CO2 has become a big issue. The hydrogen economy, COVID has focused people on sustainable climate change activity. And what we have is some strong demand growth potential for platinum in the substitution of platinum for palladium in catalysts, and certainly more diesel vehicles on the road, because a mild hybrid diesel vehicle emits 35% less CO2 than a gasoline engine. So there's a number of drivers of demand growth that are very interesting, and that seems to have been driving a lot more investors towards platinum, hence the significant increase in investment demand. And certainly we see that continuing through into 2021.
Do you think the auto sector will continue to drive platinum demand going into the future, quite literally and figuratively?
Yeah, so I think we're not out of the woods yet, and just to what extent auto sales come back next year is still unknown. We've seen second lockdown waves in Europe, and certainly most of the world isn't out of the woods. So vehicle sales might remain weaker in 21. Part of the platinum demand growth, however, is platinum's used in trucks, and certainly in China, the sales of heavy-duty trucks has rebounded. In fact, it's growing far more than just the rebound. And China's introducing tighter emissions legislation, China 6, which is tighter than the European RDE and also tighter than emissions in the US. And that's resulting in significantly more demand for palladium in gasoline cars, but platinum in the heavy-duty trucks. So we've got a good situation where not only the bounce back from COVID, but demand growth potential for platinum is making a difference. I think the real question on investors' minds, though, David, is, if you've got a big deficit and some demand growth potential, why on earth hasn't the price gone up? I think that's
question.
One.
Great question, Trevor. Do you have an answer for us?
Yeah, I kind of knew it was coming. So I think what we saw in February and certainly in March and April is that the NYMEX futures market, if you go back and you look at the price of platinum, the short-term price of platinum is highly correlated to positioning on the futures market. And most of the market-making banks hold large bars against short positions, and those large bars sit in London and Zurich. And the compliance teams in those banks were uncomfortable because if those shorts were called, firstly, the metal couldn't get to the US because there were no flights. And secondly, it was in the wrong form. And what we saw a blowout where the difference between the futures price and the spot price was over $75 an ounce. So anybody that was on the short side of a future, rather than incur that $75, what they actually did, the lease rate spiked, they leased a large bar, melted it down, turned it into a 50-ounce bar in Switzerland, the Swiss refiners, and they moved those bars to NYMEX warehouses. And if you look at the Swiss exports, there was over 600,000 ounces of these 50-ounce bars that moved to New York. The bad news was that the positioning on the futures exchange dropped significantly, and because of that, we think it suppressed the price. The good news is that those spreads have come down even below normal levels, and people are again trading that's gone net long for the first time in a couple of months. And certainly that, we believe, is what will drive the price right now, in addition to the fact that you're getting the optimism of industrial use with the vaccination. So I think the price has been muted and suppressed, but certainly it appears that there's indications in the last 15 days, there seems to be strong indications that platinum is ripe to continue moving both towards gold and towards palladium.
So the price suppression that you mentioned is mostly from the trading side, not from the fundamental side.
Absolutely. So I think what we saw was investors were staying away from that futures market. And again, most of the short-term news flow that people tend to act on tends to play out in the futures market. We had very strong buying in the ETFs, and particularly the North American markets. There was over 500,000 ounces coming into the platinum ETFs.
Now, on the logistical side of the equation, you mentioned that there were problems in March when COVID first hit. Now, I know you're in London. A lot of most parts of Europe are back in lockdown. Is this going to cause logistical issues for transporting platinum again?
So I think the initial lockdowns were pretty severe. South Africa closed its airports for several weeks and there were no flights. That was certainly a concern. And in fact, when there was no movement as well as that converter outage, we saw huge amounts of imports of platinum into China. The industrial users and the jewelry users were very worried about supply, and they also saw an incredibly cheap price, and they imported huge amounts of platinum into China. In terms of logistics, I think the freight transport flights, that doesn't seem to be affected, and platinum is quite a small, compact metal. So the movement of platinum around the world seems to have been resolved. Even a little bit, the auto catalysts that come off cars and get processed, that seems to have been flowing as well. But certainly, I think the lockdowns will more likely impact industrial activity and potentially some vehicle sales.
Yeah, going back to the trading side again, if you look at palladium prices, palladium has outperformed platinum this year. Do you think the same shorting pressures that were on platinum were absent for palladium?
They were present, David, but in fact, we saw the palladium futures market blow out in 2019. And I think that was for a different reason than COVID. What actually happened is, I mentioned China 6, the very stringent China emissions legislation, and that's resulted in the loadings of palladium on gasoline vehicles going up by about 40%. And the other interesting thing is that most Western automakers have about a 3-year forward book. So the movements in these PGMs don't affect the input cost into vehicles too much. But in China, because most of the auto producers are state-owned joint ventures, they can't have a forward book and they're buying in the spot market. And in fact, if you look at the palladium price in March, it collapsed with very little futures positioning, and then it almost rose vertically. And the gap between those two was about 16 days. And that's exactly the same length that the Chinese automakers shut their plants. So the buying of both palladium and rhodium in China is what's supporting that price very strongly, rather than the futures market. So you saw the CME, actually, they changed the delivery requirements in palladium last year. Previously, it was only a 100-ounce bar. They increased that to anything between 90 ounces and 6 kilograms. So the palladium had that resolved last year, but it really is Chinese spot buying that's keeping that price up. And there's really no, palladium is largely a byproduct, David, and there's no supply response to that price. So I think that's why that price is staying high, and that's why we believe that the pace of substitution by platinum is accelerating right now as we speak.
Okay, I'm going to touch on substitution in just a minute. But first, this interesting observation I've made about the price of platinum this year. Platinum has had a very close correlation with the S&P 500 this year. Has this correlation been held historically, or was it just stronger this year?
So if you look at the past 3 years, it was about 0.38 correlation. And if you look at this year, it's been about 0.44. So there certainly has been an increase. And part of that increase, I think, is in the period March to now, where improvements in economic activity have improved in platinum. So that is something that you would expect. However, both of those correlations are lower than the correlation to the gold price. So we've seen a lot of people trading gold that trade platinum together as well. So they've been very strongly correlated, and it's only been in the last few weeks that we've seen platinum outperform gold significantly as expectations of a vaccination reducing the risk has reduced the demand for gold and increased the demand for platinum.
Okay. Going forward, do you expect the correlation with the equities markets to hold or break down? And if, what is your outlook on the economy?
So that's a tough one. I think the economy is probably going to take some time to recover. Fortunately, platinum's got more than just that going in its favor. So if it was just purely about the number of vehicles coming back on stream, it would probably be quite weak and be quite closely correlated. However, we think substitution, diesel vehicle growth, and constrained supply from South Africa will continue, and platinum should outperform the equity market in our view.
Okay. Do you see in the future, do you see any potential risks for the other side of substitution, which is substituting platinum as a metal for its primary use in vehicles, which is a catalytic converter? Could other metals take its place?
So in terms of its use as a catalyst, people have been trying for 40 years to not use it because of its price. But it still does a fantastic job. A few grams last 100,000 miles in your car. I think the usual threat people talk about, David, is that if battery electric vehicles get a massive market share and internal combustion engines go down, and there's been a lot of discussion in Europe and other countries that they want to ban the internal combustion engine by 2040 or 2030. The fortunate thing for platinum use is that there's no platinum in a battery vehicle, certainly. And COVID has changed the debate. It's almost saying if you want to use hydrogen, it has to be green hydrogen from renewable sources. And that then says, well, actually, if you want a battery electric vehicle to be clean, it has to come from green electricity. So that's focused the debate that all the battery vehicle does is it moves the tailpipe emissions to the power station. The benefit, as I mentioned earlier, about a hybrid diesel is that to ban internal combustion engines, you need to triple your power grid capacity to charge those batteries. Europe can't do it, the US can't do it. So there's likely to be a mix of battery, fuel cell, and internal combustion. And the most CO2 efficient internal combustion engine happens to be the diesel mild hybrid and the gasoline mild hybrid. So the need for platinum and palladium in the tail of internal combustion is still very high, which is kind of comforting.
There's talk of a hydrogen economy. Is that affecting platinum at all?
So in terms of fundamental demand, not really. We still see that the demand growth from producing green hydrogen, for example, is about 600,000 ounces in 10 years. And that's interesting, but not short term. Equally, platinum fuel cell passenger vehicles, maybe 500,000 or 1 million ounces in 10 years. Where you get some short-term demand is from heavy-duty trucks. You struggle to get a big enough battery, but you can make a Class 8 truck driven by a fuel cell quite easily, and those are being rolled out. But the real issue here is that so many more investors that had never really thought about platinum, when they understand the linkage that platinum is used to produce green hydrogen and for fuel cell vehicles, they come and have a look at platinum. And when they have a look at platinum, they see constrained supply and some significant demand growth potential. And we've seen a lot of investors that have never held platinum before, they've held gold, suddenly starting to own platinum, both as a rotation out of gold and for the first time. And a lot of, much broader base of investors are considering. So we see investment demand remaining particularly strong next year as well.
The transition from combustion to EVs, that's the hot theme of the decade, basically. Is that transition still taking place at a pace that you're expecting right now?
So, David, it's probably slower than everybody expected or hoped. What we've seen is that there's been huge investment after Dieselgate in 2015 into battery electric vehicles. And they've grown in the last year, perhaps from about 2% to over 5%. And that's been, quite impressive. But it certainly has been a lot slower than anybody expected. And I think what COVID has crystallized is that the high cost of COVID to the world and to governments has slowed down that transition from internal combustion to electric vehicles. And what that does is it does a couple of things. Is it focuses on the tail of those internal combustion engines being around longer and the need to make them the most CO2 efficient possible. So we've seen governments, rather than put money into upgrading their grids, they've changed policy and made hydrogen mainstream. And that's really what's given the hydrogen economy a boost. And then separately from that, the focus on clean internal combustion goes back to this diesel mild hybrid. So I think we've had COVID that has crystallized a few things and also showed that transition is going to be probably a lot slower than anyone expected. Let's watch the space.
In a current vehicle, let's say like a family sedan running on petrol, how much platinum is in that car? Do you have a ballpark figure for the dollar amount?
Yeah, so typically in the US, most passenger cars are gasoline, and they would only use palladium, and you might have 5 to 7 grams of palladium, a few $100s worth of precious metals. And in a fuel cell vehicle, you might have, at the moment, half an ounce of platinum. That's a few $100s of platinum in a fuel cell. But fuel cell volumes are so low that right now your loadings and your pricing is a little bit misleading. But certainly the amount of platinum required in a mild hybrid or a fuel cell electric vehicle is, 2 to 3 times more than you might find in a diesel sedan, for example. The real issue is the substitution means that I focused in on the pickup trucks in the US, which I think is quite a popular segment of the market now. That Ford F-150 and its counterparts, it's about a 3 million vehicle a year market. Now, those are big engines. They've probably got more closer to 10 grams of PGMs on them. and they're low temperature, and they can be substituted quite easily. And the real issue at current prices, you can save about $170 per vehicle, and that goes straight onto the bottom line of the automakers. Now, the automakers have been having a tough time, so they're quite keen to capture that. And just that segment alone would be $500 million onto the automaker profits. So that's why we think the substitution has been happening for the last 2 years, is accelerating right now, and is of much keener interest to the automakers during this crazy year that's been 2020.
Yeah, it has been a crazy year. I've read stories of thieves stealing catalytic converters in parking lots to try to melt it down and get the PGMs out of it. Seems counterproductive to me. I think there are easier ways to get a hold of platinum and palladium.
One of the other things that's driving, the earnings of the platinum mining companies who produce PGMs, if you go back to when rhodium was last $10,000 an ounce, that's when we saw the theft of catalytic converters in 2005, 2006. And really the high price of palladium and rhodium is what's driving those thefts today. And you've got, rhodium that's gone well over $12,000 an ounce, and certainly is helping earnings. So yeah, totally counterproductive and crazy, but I think the high price of palladium and rhodium, again, being driven by China 6. So those sort of drives are certainly an issue. And I suppose the one thing we didn't touch on was jewelry. That you may recall after 9/11 in the US, we saw a lot of engagements and marriages rush the following year as people reevaluated their lives after that event. And equally, COVID, people want to give a meaningful gift to someone that they love. And platinum has the strongest correlation to love gifting. So part of that love gifting, as well as the price dip in March, has seen a lot more stock bought into China and a lot more jewelry sales. So we see jewelry sales increasing next year in China to levels above 2019, mainly due to those factors.
Is that because of an economic recovery? Because I don't know if there's a correlation between a recession and the number of marriages. What do you think?
Wouldn't want to go into that correlation, but the interest in China was more about the manufacturers and retailers, and the price of gold had run up. So because gold jewelry had become more expensive, they were selling less of it, and they were trying to find a better way to capture margin. And platinum jewelry is very popular and strong, more about love gifting than marriage per se. But yeah, quite an interesting space. And it's certainly the most perspective for platinum that I've seen in 6 years.
Okay. Well, thank you, Trevor, for coming on the show and giving us an in-depth overview of the platinum market. And it was very educational. Thank you very much.
Thank you, David. Really a pleasure to be on your show. Appreciate your time.
Appreciate it.
Thank you.
And thank you for watching Kitco News. I'm David Lynn. Stay tuned.